Welcome back, everybody. Rodrigo Fondor here with Asheville Real Estate News. As a quick reminder, this episode and all of our episodes here are brought to you by American IRA LLC. They're a local Asheville custodian for your self-directed IRAs. If you haven't checked them out already, highly encourage you to do so. When we're talking about investing, one of the things that's a very important topic, but maybe it's not talked about as often as it might need to, is the topic of insurance. And so today we're going to be talking about insurance, specifically if you have rental properties and you're doing the long-term approach to real estate investing. What are some certain components of insurance you should think about? What are the questions you should be asking? And just make sure you're not missing anything, because coverage can be the make or break difference down the road for if your decisions actually stack up and make the difference you want them to make in your life and the life of everybody around you. So without further ado, we're going to be joined here with Jared Bellmund with All Choice Insurance, and we're going to be talking about that. Welcome to the show.
Thanks for having me, Rodrigo.
I feel like you're a friend of the show. I don't know if that's like an appropriate, appropriate way to say it, but
I like it.
Yeah. Before we even dive into the insurance component of it, and in case people missed the first episode with you, give us a little context of who you are, what you're doing, and all that.
So I'm an independent insurance agent here in Hendersonville, North Carolina. I work all throughout Western North Carolina. I specialize in basically working in the real estate market. So that's kind of my niche. I work with a lot of investors, property managers, realtors, and lenders for new purchases. But really have been focusing on those investors and owners of properties, and even some habitational stuff like condo owners association and apartment complexes.
All the fun stuff, right?
Yeah.
yeah. So insurance is, I think there's a little bit of a lot of people have this perspective that insurance is kind of a weird thing. It's kind of sticky. You don't really know what you're doing with. Yeah. How'd you end up getting into insurance, and do you even enjoy it? And if you do, why?
Yeah, no, I love it. I really do.
Okay.
So I come from the restaurant industry, which is really weird, but met my wife 10 days after moving here, and she was like, I don't know if 4 walls for 80 hours a week is working for us. So had an opportunity to get into insurance. I was a captive agent at first, and then left there. Just didn't fit my mold. Really wanted to find a client and be able to take care of them holistically. So became an independent agent, which opened up opportunities to find one client and take care of everything they need. Because for me, what I love is the risk management of it. So ensuring that no matter what happens, you're taken care of, your family's taken care of, your business is taken care of. If something catastrophic does happen, or even if something minor happens, that you're not having a hiccup, you can keep operating your business.
A lot of minor things adding together can kind of be a catastrophic thing if you're not positioned well to take care of them. So I know when I first started, insurance was like the last thing. It was just like, I got to pay for it. I'd always been pretty proactive on my car insurance, because I think I've told you my background was, before I did real estate, I did like personal injury compensation and worker comp compensation. So you always see like people having good plans, bad plans, all the fallout of it. But with property, I was like, as long as I have a replacement value and it gets burned, then I'm good and nothing else matters. I'm still learning that there's obviously a lot more to that. As somebody who has rental property, how do you, what are the sort of questions you ask them to figure out what sort of coverage they need?
Yeah, the first thing is usually how the property is being used. So is it a vacation rental? Is it an annual rental? Is it something that you're going to use part of the time as a secondary and then rent it out? Airbnbs have become really big. So just how it's going to be used by the tenant is the most important thing to get started with.
And why is it so important? Like, why does the use matter?
Yeah, the risk is different. So if you're having people come and go as a vacation rental, it's going to be different than if you have an annual tenant that's there on a yearly basis that you can renew the lease with each year, analyze that. And it's someone that you probably have a better relationship with than someone who's using a vacation rental. Airbnb, same thing. It's a lot of digital stuff where you may never see the person, depending on how it works. And then, if it's your secondary home, it could have your stuff in it. And then people are using that as a vacation or a part-time use. So it's just a good first step in mitigating that risk.
What if I want to transition from like long-term to a short-term? Is that an easy thing to do? Or like, I know that's something that a lot of times, hear about right now with Airbnbs going back to. I was like, well, I had a long term. I'm just going to switch it over. Is that a switch that's easy to make? Do I even have to let my agent know, or do you just kind of do it and go for it?
Yeah, most definitely need to let your agent know it is a different risk, and so you want to make sure that you're covered for that. The underwriter knows that. Cost value wise, it shouldn't be a big change. It really depends on your carrier.
Right.
But with multiple carriers, it may be that there's other carriers that will take on that risk at a better value for you.
Okay.
So it's something you want to let your insurance agent know so that they can, possibly shop it around for you, keep that value the same. But yeah, there's also other things that you want to ensure that you have when it comes to liability, not just the property itself, that changes from a long-term rental to a short-term rental.
What do you mean by that?
So most of the time you can, so if it's a secondary home that you're then using as an Airbnb, which I probably see more than, there's short-term rentals that people have the
just short-term rentals,
just short-term
right.
rental. But most of the Airbnbs, I see people using it as a secondary home, and then when they're not there, they're taking advantage of that. That's a big difference in risk between someone that's always renting out their home, and then even a bigger risk than someone that's there that just has an annual tenant that they know is there, and it's all their stuff there, and they have most likely have a HO4, a renter's policy on file for that person. They know that they're insured.
Can we dig into that?
Yeah,
I want to go back to Epic. Sorry, continue,
That's
and
fine.
I want to go back.
So yeah, no, dig in.
So a lot of, I don't know, personally, I don't have all of our any tenants that we manage. It's like if you want to get renters, get it or not. It doesn't make any difference. But it sounds like it makes a difference. So I'm just kind of curious.
Yeah, it would definitely make a difference. You want to ensure that they're taking on the property liability. I mean, they're using it. They're inviting people into the home you own, but they're living in. So they have inherent risk that's coming and going that they're responsible for. So you don't want to take on that risk for someone that's not your tenant coming onto your property. Your tenant is liable for an injury to somebody, and it ends up on your insurance.
So can you give us a scenario about what would happen if you don't have renters, and if you do have a renters?
So as an owner,
right,
it's a pretty good chance that the attorney would come after the owner if the tenant doesn't have.
And what happens? Like, say I come
insurance.
visit you, and you don't have renter's insurance. It's winter. I'm walking up the steps to your house. I slip and fall, and I hurt myself.
Yeah, the owner's probably going to get sued.
That would be, and the tenant wouldn't be responsible.
I mean,
I see what you're saying.
Is he? Yeah,
but if there's no coverage, then there's nothing to go against, essentially.
Right. I mean,
So then what you're saying is,
does the tenant have to go after? And if they don't have assets, then the attorney is going to keep digging to find an asset to go after.
Yeah. So then the renter's insurance, I guess, is more than just whatever the belongings are inside of the house, right? So it's the biggest component is maybe even the liability.
Yeah, I think for an owner, they also have to think of the property in the sense of, what if something happens to your home that you caused? So what if a pipe breaks, or you didn't update something with the heat ducts, and things freeze, things flood, sewer backup, all things that might not be the tenant's responsibility, and the tenant comes after you for that. You need your liability, and maybe to ensure that they have protection for their property, so they don't come after you and say, well, you never asked me to get a renter's policy. You never told me I was responsible for it. I thought you had it covered, which really the owner shouldn't have to worry about. It'd
just be ideal to never have that conversation, right?
It would be ideal,
yeah. Okay. No, that's good to know. We'll have to make some changes on our end, I guess, a little bit.
And it's really just one of those conversations you have and say, I mean, and renters is so inexpensive. I mean,
I was about to ask.
$125 to $150 a year. So you're talking $10 to $15 a month, and that's a normal 2-bedroom home. Apartments are going to be a little less. If it's a full family living there, maybe a little bit more. It just depends on what they own. But it's going to protect their stuff.
That's good too, yeah.
And having that conversation allows you to say, hey, I'm already covering this. Yeah. You just need to add this. So
no, that's a good point.
It should be pretty inexpensive.
But you mentioned something else. So, anything else about the property itself? When you're insuring the property as a landlord, just the property component. I know I want to talk a little bit more about like the general liability and things like that outside of that, but from a property component, anything else to be concerned about?
Yeah, so an owner wants to keep everything up to date. Roofs are very important. Decking, ingress, egress, how you come and go from the property, make sure it's cleared. Obviously, you have to have a good standing home for it to be insured with a tenant in there. Most insurance companies are going to send an inspector out anyway, so they're going to look at what's good and what's bad. Pets, ensuring that the tenants don't have a pet that your insurance policy doesn't allow. So those are just all things that you need to kind of work out and hash out in what you're doing. As an owner, look for insurance. Make sure you're working with companies that are maybe a little more open. But then, you mentioned general liability, but on the property itself, a lot of owners can opt into a landlord policy.
Right.
And so that'll protect you for more than just personal injury and bodily injury on the property.
I had a question about vacancies. So vacancies happen when you've got rentals. Is there a difference between a property being vacant, between tenants on a long-term lease versus in between tenants for somebody who's doing like a vacation rental?
Yeah. So your policy is going to allow for a certain amount of days for that property to be.
Is there an industry standard for like long terms?
Yes, but you really should look at your policy. Every underwriter out there is like, don't say it, because your policy is going to specifically say what is allowed and what's not, and you want to follow what your policy says, not what the industry standard is.
So it's got to be a vague answer, I take it.
It's got to be, Okay. I mean, it should be 60 to 90 days. That's going to be where the industry standard falls.
Well, just a measuring stick, right? Yeah.
That's...
Okay. And is that the same thing for short-term and long-term rentals?
It's going to be a little different for short-term and long-term and secondary homes because they know that people are coming and going.
Some are going to be vacant more often.
Right, which is exactly why you want to let your insurance agent know that you're switching from a long-term to a short-term, because there's going to be more vacancy, and that's why it's a higher risk.
Gotcha.
Plus theft and stuff changes.
Yeah. Well, someone's more vacant.
Right, someone might not be there all the time.
You were talking about holistic approach to insurance earlier, and so I want to kind of take that word and apply it to what we're talking about here, and talk about just general liability or an umbrella policy as well, and talk about I know you sell insurance, so you're probably definitely in favor, right? Yeah. So
buy
of course,
right? Buy as much as you
But on a practical note, it'd be great. I don't know, putting you on the spot, I guess, with this, but if you have any stories of when you see somebody who's well insured, like that it's paid off for them, if that makes sense, if that's something you're able to share, like as an example, concrete example.
Without a doubt. I mean, so when I say holistic, it's not that I want to sell you as many possible policies as I can to make as much premium. Especially here at All Choice, we really look at analyzing your risk, looking at what your assets are, what you have to protect. Do you have a family? Do you not have a family? Do you have a huge savings account? And you need to protect that across the board. Right. And that overflows into your personal policies too. There should be a barrier between your business and your personal life, but piercing that veil, the fact that there's a term piercing the veil means it could happen. And so you want to protect yourself in case it does. So as an owner, you're going to have your property insurance, which is going to have liability insurance. You can get a general liability or an umbrella for your business. It's all stuff that you should analyze your risk, see how high the limits are. Some homes only go to a certain amount, 500,000 to $1 million, especially rental homes, because
there's a cap,
right, they lower that limit. So having an umbrella on top of that will help if something serious does happen. But then on your personal side, you don't want that veil to be pierced and then they come after your assets. So having a auto insurance, your own homeowners at a certain level. So in order to have an umbrella in North Carolina, you have to have $250,000, $500,000 on your automobile, and $300,000 to $500,000 depending on the carrier for your home. Right. So you're already at decent levels for your personal property, and then you have an umbrella on top of that.
Do you mind explaining what an umbrella is, in case it's somebody's first time that they hear this term or they're familiar with it?
So the simplest way to explain an umbrella is it's an overarching liability coverage umbrella that your other policies fall beneath. So your homeowners, your auto insurance, anything else that has a liability limit to it is underneath. Now the umbrella doesn't come into impact. Say you have $300,000 on your home, and you reach that liability limit of $300,000 on the home first, and say you're sued for $500,000. The other $200,000 is going to come from the umbrella. So you max out your lower policy first, and the umbrella is the overarching after that's maxed out.
How often does somebody even ever get to their umbrella?
Let's hope not a lot.
But just in your personal experience.
It happens more than you think. To be honest, the people that that have umbrellas are usually better risk, which is kind of a little silly that the higher risk people aren't taking out the policies they need, but they have the assets to protect, so they're a little more careful with what they do. But auto policies, I've seen a lot of at-fault accidents that end up coming after. And then in business, it happens a lot because, I don't want to talk bad about attorneys, but they have a job to do, and that's to ensure that their client is made whole again.
Yeah, arguably talking well about them if they're doing their job.
Right, yeah. And so if they're being made whole again, and it's a $500,000 claim, and that's what their injury is, and you only have, especially if you have state minimums on an auto, that's like $30,000.
It's
and
bad.
so really, really need an umbrella, and when you're that low, and you can't get one, so you have to have that higher. But in this day and age, things cost more, from medical bills to property. So having that coverage, and it's just analyzing what you need to protect and what your risk is.
When you go,
I keep saying that, but
no, but I mean it makes sense though, right? So like in real estate, it's the same thing. Anytime you buy a house, you're making that risk assessment. Like, is the risk that I'm about to take on worth the upside, right? Right. And if it is, then in theory, it's a good deal. And if it's not, then you walk away and you pass and you look for another one. So I think the risk assessment is it's very familiar to anybody in the real estate world. When you're going to find an insurance agent to have these questions and make sure that you are sleeping well at night, is there any couple of questions to really like dig in and find out if the agent that you're talking to like actually knows what they're saying, or are they just textbooking you?
Yeah. So my advice to people is to not ask questions like how good are you, how good is the service going to be, but listen to what they say initially. So if someone's just grabbing information from you and going to throw it at someone else to quote, that's not what you want to hear. What you want to hear is, hey, we need to talk about this, right? You want someone that's willing to have conversations with you. Anybody that uses, let's mitigate your risk, let's analyze your risk, that's very important. Because if they're not trying to get, and that wants to look at it holistically. And of course I'm saying all the things that I'm doing, but there's a reason that I've decided to do it that way.
Well, you believe in it, right? And that's important.
That's really the way that it should be done. Insurance shouldn't be sales, right? So I don't want to be a salesman. I want to be a risk analyzer or a mitigator, and I want to have that be my job so that I can advise you on what's best for you and what you need. And sometimes that's telling you you don't need that much insurance. Sometimes it's telling you need more insurance, and those are both difficult conversations. But if your agent or the agent you're talking to is not having that conversation, then you need to find a new agent.
Heard. Yeah, which will be another tough conversation.
Which, or a great conversation if it's coming to me. So
I know a lot of what we talked about kind of today is focused around the long term, with long-term rentals or rentals, which a lot of times is a longer-term strategy in real estate to go, right? It's multi-decade strategy. Does your approach to insurance is there a similar like thought process around that sometimes? Like if you're doing something in real estate that's 3 to 5 years, is it going to put you in a different insurance conversation? Somebody's like, hey, I'm going to be doing this for the rest of my life.
I would think so. I mean, it's the risk you're taking on, because obviously if you have a 10-year plan, you're making decisions that are going to impact your assets over a long time. If you're buying and flipping homes and saying this is a 3-year plan to make as much money as I can,
and then you're out,
then you need to protect yourself for those 3 years, and what that looks like is a lot different than what it looks like for someone in a 10-20-year plan.
Okay. Man, I appreciate it. That was super good, insightful conversation. Excellent. A lot of questions that I've been curious about for a while anyways, able to get answered. Any closing thoughts about insurance and at all? Maybe something, nothing specific what we talked about, but just to make sure it's like, have this conversation? No,
I think making sure you have the right agent is number one. I think that's the most important thing with insurance. The second thing is analyzing your policies at a set time period. It doesn't have to be annually. Could be biannually. It could be every 3 years. Again, it depends on what kind of.
Well, quick. What are questions you'd ask yourself as to when to evaluate policies?
If you're buying and selling, multiple year to year, every year. Okay. If you have more of I own 5 or 6 properties, I've had them for a while and I'm just sitting on them, every 2 to 3 years should be fine. And then on top of that, if something serious changes, you need to just contact your agent.
Heard. Okay.
Yeah.
Well, Jared, man, appreciate it. Thank you so much. Great show, great insight, and friend of the show, so I'm sure we'll have you on here again at some point in time.
Thanks a lot, Rodrigo.
Yeah, absolutely. All right, you guys, thanks so much for tuning in. Another episode of Asheville Real Estate News. We'll see you guys next Tuesday. But first, I just want to remind everybody that this coming Saturday, so January, I think it's the 19th, we are co-hosting a one-day seminar with Carolina Real Estate Investors Association. We're going to have Joe Varnador from Note School come in and speak to us about owner finance notes and buying and selling mortgages and how to do creative acquisition of property. So if you haven't checked it out already, just go ahead and do so. You can find it on the events page on Facebook or go to the website, check it out. If you're going to sign up, use the code AREN1 and we got a discount for anybody who's tuning in. All right, you guys, see you next week. Take care.